So this video is going to provide you with some basic journal skills. All I'm going to do is work through the examples in the journals workbook. So if you feel comfortable doing those, just check your answers with the solution on the dash and you don't have to watch this video. However, in future videos, I will be covering theory as well, so you need to make sure you've watched them. So this first one here is 1.1. These are just some basic journals. So the first thing we're going to do is put the date in. This one is the 1st of June for the first journal. Now this workbook is on the dash under Journals Workbook. I'm also going to give you a hard copy, but if you lose that, it's up to you to print it. So we're following this format here. Okay, the only thing I won't be doing is ruling off these lines because I don't know how to do it on Word, but you need to be doing it in your books anyway. So on June the 1st, they performed services for $1,000 cash. Now, first we have to identify which accounts are impacted. So the first one is going to be cash at bank because we paid in cash. And the second one is we're earning money, which is revenue, so service revenue. If you have a look up here, revenue going up is a credit. So service revenue is going to be a credit, and our cash at bank is an asset going up, which is a debit. So all I'm going to do is write cash at bank for particulars. That's going to be a debit of $1,000. I'm going to indent the second one, and that is a credit. And I'm also going to write a description. So my description needs to be in brackets. You pretty much copy the journal description. So performed services for cash. Okay, and that's my first journal. So you're going to leave a line in there and you're going to rule off just in the particulars column. So my second journal was on the 15th of the 6th, and in this one I did 1,200 worth of services. I got some cash and he's going to pay me back later for the rest. So we're looking at service revenue again, that's our credit. We got some cash, so that's going to be cash at bank, our asset going up, which is a debit. And we got paid $1,000 cash. We also didn't get paid for 200. He's going to pay us later. So who is it? F. Kingston is going to pay us later. We're just going to call that an account. So at the moment, that's an asset, exactly the same as cash at bank. And when he pays us later, we'll pop that money in the bank. So that one was service revenue. And here, 1,200. Now, you need to make sure that every single time your debits balance with your credits. Okay, so this is 1,200 on this side, 1,200 on that side. If they don't balance, you've put something in the wrong place, or you've put it as a debit and it should be a credit. So make sure you're checking that. Okay, so rule off, leave a line, 25th of the 6th for the next one. And we received rent for $500 cash. Now again, rent is a revenue going up as a credit. They got cash, which means that all of this is going to go to cash at bank. And cash at bank, we had $500. That doesn't look like it's lined up. It's not. Okay, and the other one, it's not service revenue this time, it's rent revenue. And my description, pretty much going to be the narration. Received rent from subtenant in cash. Okay, and our very last journal entry for this one, don't forget to rule off, is we received interest on bonds. Now, anytime we're earning money, it's revenue. So this one's going to be cash at bank. And what kind of revenue are we earning? Interest revenue. So that's going to go up $1,000. So an asset going up is a debit. Interest revenue is a revenue. Revenue going up is a credit. And I'm just going to put a little narration on here. You get marked down for not having narrations, so don't just skip over them because you'll forget in the exam. Received interest on bonds. Okay, and that's it for 1.1. So the owner is investing cash and equipment. Cash at bank, we know, is an asset going up, which is a debit. And equipment is also an asset, which is going up, which is also a debit. So we've got 1,500 and 1,000. Now we've got to find out where that's coming from. It says there the owner has invested it. So anytime an owner is putting in money or taking it out, we're looking at owner's equity. So they invested the whole thing, which is 2,500. Now we need a narration for this one. Owner invested cash and equipment, and that's it. So second journal entry occurred on the 10th of August. We bought equipment and we paid for it in cash. So equipment is an asset going up, that's a debit. And cash at bank is an asset going down, that's a credit. So it was $500 for our equipment. If at any point you're stuck with what to put in the narration, just copy the actual description that they've given you and just make sure that if there's any check numbers or receipt numbers that you put them in there as well. So furniture from J. Jones. Furniture is an asset going up, which is a debit. Now they haven't actually said what we've paid with it. It's not saying cash, which makes me think that they actually owe J. Jones money for later on. So it's not cash at bank. We're actually going to put J. Jones account, exactly the same as you would cash at bank, except now our cash at bank is going to be J. Jones. So that is a liability. It's something that we owe, something that we have to pay. A liability increasing or going up is a credit. So our narration, furniture from J. Jones on account or on credit. So on the 17th of August, we actually paid J. Jones some of that money. Oh, all of that money. Okay, so we are paying him, we are paying off his account, and we are taking cash out of bank. So I might not know what the debit is, but I do know that cash at bank going down is a credit. Now, when we originally bought this furniture, we made J. Jones an account. Okay, we're now going to pay that off. So a debit here and a credit here will cancel out, and we'll end up not owing J. Jones anything. So pay J. Jones account. Okay, then on the 23rd, we supplied services to A. Smith. Again, it doesn't say whether it's cash or credit, so we're assuming that it's going to be credit. So we've got cash at bank or accounts receivable going up, that is a debit. And we've also got service revenue going up, which is a credit. Just going to scroll down. I've got it in front of me, so I'll just read it out as we go. So A. Smith account was $400. He owes us $400 for the services that we performed and supplied services to A. Smith on credit. All right, lucky last journal for this one occurred on the 31st of August. We received a payment from A. Smith, so we're receiving money. Cash at bank, our asset, is going up, therefore it's a debit. And our credit is going to be that account. So A. Smith did owe us money. He's just paid us, so he no longer owes us. So if you're stuck with that one, try and figure out which one you actually know. Cash at bank, we know we're receiving money, cash at bank is going up. Therefore, the A. Smith account must be the credit. We don't have any other options. And on A. Smith account. Okay, and that's it for 1.2.